today, it is my privilege to demonstrate and be able to share learning to you about group reporting and reporting consolidation using Xero and what are the other methods that we can explore on this. Let's start with our learning objective. We have 4 learning objectives. One is setting up properly or preparing yourself for group reporting and other very small requirements that you need to understand before we need to start a group consolidation. Number 2, ways how to prepare group reporting and consolidation using 3 ways or 3 methods using Xero itself. Let's check if that is even possible. Number 2, using a spreadsheet. And then number 3, using a third-party app. And then, of course, for each of these methods, we will going to discuss also advantages and disadvantages. Okay. And then finally, just a recap and some tips and notes that we need to remember on this. So this topic actually covers group reporting and reporting consolidation. So for basic reporting consolidation setup, these are the things that we need to know at the beginning. First is you need to have, of course, obviously a Xero active organization, and your access must be an advisor access. Number 2, your role in the organization must be someone who is responsible for reporting consolidation. So if you are watching or you are attending this webinar and you happen to manage multiple organizations in your company, meaning maybe you are a holding company or a group of company, and you are tasked to prepare consolidated reporting from different entities, then this is the right webinar for you. How do you optimize this using Xero? Your delegation responsibility is that you are either a senior accountant or accounting manager, or in some extent, could be a VP for finance or director of finance. Number 3, you have to make sure that you have set up properly your Xero organization. So we have a lot of content here in our YouTube channel where we share our learning on how to properly set up a Xero organization on individual organization basis. Number 4, very important, as a group accountant, having responsibility of making sure that all of your individual Xero organization are properly set up. Not only that, very key preparation you need to do is that your chart of accounts across all your group of companies, individual Xero organization. So let's say you have 10 Xero organizations, including HQ, okay, your headquarters with a separate Xero organization. You must have a uniform chart of accounts. What do I say uniform? Uniform in terms of account code and account name, okay? So example would be that would require you to be very mindful in creating a chart of account is the bank type, for example. So it could be in different organization, you have different banks. So you will need to assign unique chart of accounts code for this individual bank. So while I say it should be uniform chart of accounts, but be mindful on your bank account since each of the organization has a unique bank account, if that is the case for you, then you would assign a unique chart of account code. The reason for this is that it will allow us in the other methods to properly do the elimination entry from the individual organization to the group level. So if you are a group consolidator, you would understand that there will be elimination entries in making consolidation. And when we're using the third-party app later, when I will show you, this becomes very relevant because the third-party apps usually capture totals based on chart of account codes. So if you have a different chart of account code for, let's say, insurance expenses, in one company you will have 701, and then in another company you will have 902, okay? But it happened that 9002 in another company is a different chart of account. It could be travel expenses. You will get into the issue later on the consolidation, because it will now merge the travel and the insurance in one line when in fact in detail they are separate accounts. So this number 4, you need to make sure that you have uniform code and chart of account names all across your Xero organization. Of course, with the exception of your bank type, which is always different. Number 5, set up intercompany accounts across group of companies' chart of accounts. So if you are a holding company, there are related party transactions or intercompany transaction accounts. So you would either create a receivable or a payable intercompany accounts, right? So if, for example, I will show you an example here right now, the chart of account on my demo company. So you would notice that I created an intercompany account called due to from demo to, right? So my company is Delta Demo 1, and I have a due to from Delta Demo 2. And take note, I'm using a code 895. Now, in my demo today, I will have two organizations, Delta Demo 1 and Delta Demo 2. So when I switch to Delta Demo 2 on my second Xero organization, and I will look at my chart of accounts, the chart of accounts will all be the same except for the bank type, right? So here I have 102 for this bank, but take note also my intercompany is also the same code. But this time the name would be Delta 1. You will have 895 as the same code in my other Xero organization. The reason for this is that later, when our consolidation tool, the way it will pick up the numbers, it will be based on your account code, okay? So in this company, it could be this is a payable side, and then in the other company, it could be a receivable side. So in your elimination, it each would have the same amount, except that it is the other one is a credit, the other one is the debit. So in the elimination entry in your consolidation, the system will be able to pick up immediately that these numbers are need to be eliminated because they are in the same code. Okay, so that is very important. You need to have an intercompany accounts. So in my example, I have due to from, due to / from the name of the company, okay, of the group. So if you have multiple companies, let's say you'll have 10, in each organization, you will have 9 intercompany accounts relating to each of the other company. In the other company also, you would also use the same account code that is relating to that other company as well, okay? Now, if you don't know what I mean about intercompany accounts, I'll give you an example. Basically, we call them sister companies, right? And in some cases, they're doing either transfer pricing, transfer costs, or maybe they're borrowing money to each other, right? So let's say company A would want to borrow from company C. So then what normally happens in the finance group level, they will just simply make a fund transfer from bank C to bank A, okay? So what would happen is in company A, they will record a debit a bank account and then credit the intercompany liability from C. And then the other hand on C, it will debit a intercompany receivable and then credit the bank, okay? So in a nutshell, that is intercompany transactions. And to capture this, you need to have an intercompany account. So intercompany account is the one that's linking between organizations. Number 6, you need to do proper mirroring entries of intercompany account. I'll give you an example. So I'll run a account ledger here. So due to, from, and then I run back this to July 1. Okay. And then I would pick one particular transaction here. So this is my entry in company 2 when I'm receiving money from company 1, right? So technically this would be a debit to my bank account and a credit to this account using a received money. Now, if I wanted to see this, it should be mirrored properly on the other company. So when you're doing intercompany transaction, you do not book only in one organization. You need to book also the opposite or mirror entry on the other organization. So in this case, Delta Demo 1 is lending money to Delta Demo 2, okay? So if we wanted to see, and then I will run also a due to from, see, I do have an 895 same account here on the other company. So now let's do how the mirror will happen. So here in Delta Demo 1 is lending money to Delta Demo 2. So it is a spend money, and therefore this is a debit entry. As you can see, it's a debit entry. And then I'll add the bank as well. So we would see the bank entry as well here. So if you see in the bank, you would see also this is the debit and this is the credit. This is the bank. Okay. Now, that is the entry in Demo 1. This means we are recording a receivable here. So this is due to instead of from. So this is due to Delta 2. So these are all my ledgers in Delta 2, all my transactions. On the other hand, when I look at the other side, I would have here this entry as a credit. So here, I would have a debit entry on Delta Demo 1 company. And then I have a mirror entry where I receive the money, I credit this account, and I would have a debit on the bank account. Okay? So that is what we call the mirroring entry. And take note, I'm using the same code for each of them. So 895, and then you would not notice also I'm using 895 as well on this. Yeah, 895. Okay, so make sure you do a proper entry of intercompany accounts transaction so that later you know there's elimination of entries. Now, what would happen if you have only one entry on one company, and if you don't have in the other entry, then you have a problem in the consolidation. Okay, the related parties between companies is a problem. Okay, so if you are a consolidating accountant and then you have other accountants on different organizations, you have to make sure there is a proper process or internal control that when there is a intercompany transactions from one company, that is properly communicated to another company so that she or he, that accountant, need to post properly the corresponding entry. Okay, now there is a unique accountant right now in many group companies called intercompany accountant. Her or his role is solely to capture interrelated companies or intercompany entries. So once it makes an entry from one company, he or she makes sure that that mirror entry is also done on the other side. Okay, so don't forget about the mirroring entry. Number 7, maybe your organization would have different reporting consolidation package. So be mindful on what is the template. Okay, because per group company or group consolidation may have a different templates. That is something you need to consider. Otherwise, you go for the standard template. The number 8, because this is group reporting, does not mean also that there is necessarily that you mix up all your source documents, no, and the filing system. We always recommend that there should be individualized or autonomous method of documenting source documents and your filing method. Okay, so these are basic things. There's a lot, but I think these are the basic things you need to understand before you need to proceed with group reporting or reporting consolidation. Okay, so let's move on to the next learning objective. So like I said, if you're using Xero, there are 3 ways you can do group reporting or reporting consolidation. Okay, the first method would be you would use Xero itself. We'll check if that is recommendable or if that is something we can do. Number 2, using a spreadsheet or Excel. Okay, and number 3, you would use a third-party consolidation tool. In our webinar today, I will use Fathom as a third-party app. I will demonstrate later on the last part on how it will using a third-party app. Now, Fathom, you can find it in your Xero Marketplace app store. So just go to the reporting group and you would see, or you can type from the search in Marketplace, consolidation report. I'm very familiar with Fathom because Fathom was one of the pioneer apps, was been there with DaVinci and Spotlight when I started around 8 years ago. Okay, and it's still very useful. And of course, there are many other third-party apps also. So let's start with Xero. So question, can we use Xero for reporting consolidation? My true and honest answer is no. Okay, so when a client will come to us and they will ask, I have multiple companies. Can I register 1 already for this? And I said no, because if you have Xero, it's 101 organization. And they get confused. Why? Because the desktop software like QuickBooks, Peachtree before, you just buy one license and then you can create multiple organizations inside in one license. That is true in desktop accounting, even in Tally, no? But for cloud accounting now, particularly for Xero, QuickBooks Online, Udo, Zoho Books, MYOB, and all other accounting, cloud accounting, you are going to use only 1 organization for one company. So to break down in a nutshell, if your company has one business license or incorporation, that is 1 organization. Okay, so since that is the case, can you really do consolidation? Again, like I say, no, you cannot. But in our experience, there are still clients who would insist, okay, using Xero as a tool. We do not recommend it, but for purpose of demonstration, we will show you how it is done. Okay? So in Xero, to use consolidation for multiple organizations, the tool that you would need is you have to make sure you use the tracking categories. Okay? So tracking categories are actually not built for multiple business units in one Xero organization. So for argument's sake, let's say you would really insist of using one Xero organization. Can you actually do it? Yes, but this is not recommended. It's not good. There's a lot of issues. I will tell you the disadvantage of this. But for this demonstration purposes, so what I would do, I create a tracking category called unit, or I could say business unit or company. You can use the name company, if you would want. Like you can name company, or so for in my case, I would use unit. And then under company or unit or business unit, I would then put the company name. Like company A would be unit A, unit B. Now it's up to you how you would name your options. So in my example here, I will have two company, unit A and unit B. Okay? I am recording transactions in one Xero organization for all transactions in all multiple organizations. Okay? So once you set that up, obviously, every time you create an invoice, okay, you need to define the unit. So if you're issuing an invoice for company A, you would use company A here. It is important that for each of your entries in this Xero organization, you define from which is this company from. Manual journal, the same thing. You have to identify which is this manual journal for. You define what is the company. This is true in your spend money as well and you receive money. Okay, so you define the company name for each of this entry. Okay, so you have entered this already, and how would it look like in your consolidation? So since we're using tracking categories, then therefore we can run reports using tracking reports also. So first is, let's go to P&L. So you can actually run a P&L per company or per unit. So what I will do, I define the month, obviously here, and then I'll select all units. Okay, it's better that I would show date range so that I would see all, and then this is because my data is until August. So then you have already a consolidated P&L for each of the company, because Xero allows you to generate P&L per tracking options based on tracking category. So I have now a P&L for my company A and a P&L for my company B. Okay, so P&L, doable. Okay, let's not talk issues first. So P&L, it's feasible. Number two, let's do balance sheet. So can you run a separate balance sheet for company A and company B? The answer is yes. Okay, but not on a comparative method. So you can run only single balance sheet for each of the company. Unlike P&L, you can compare them, side by side. Here, you need to run one by one. So I run company A first, okay, and then company B, okay? So here, what's the problem here? The problem is you will have to open the balance sheet per company. So you do not actually see a consolidation of the balance sheet. If you want to see a consolidation of balance sheet, you just say, do not filter, and then, yeah, the number here would be the consolidated of A and B. So here, the company balance sheet A and B is already included inside. So balance sheet, yes. Okay, now, how about statement of cash flow? So here, so it's here. So you can actually apply a filter here and then run last month, and then I'd say June here. So I can run a P&L, statement of cash flow for company A, and then you can do actually two the same time. So here, this is the problem. It will combine already. So if you take the two unit A and B, you will show the consolidated as in one column. But if you want to see the separate one, just take one company and update. Done. Okay. So statement of cash flow, yes, you can. And then finally, movements of equity. Yes, you can actually also separate. These are new reports here. Okay. So the new report can actually allow you to, yes, it can filter also. So the same thing, right? So I'll run as June, and then I can run December, August, right? And then I can compare periods, and then I want to see unit A, and then I can run separate unit A. Okay, so you have that, or you can do also together. So that's consolidated. So let's do this properly. And I'll do August. Okay, and then if you want to consolidate, you can take like this. Okay, so answer, it can be done. Let's look at what are the advantages of this. So obviously, it's not expensive because you only need to subscribe to one Xero organization. You will optimize the use of tracking categories for each of the company. Use tracking categories for each of the Xero company. It's very easy to run the report and can be published in Xero. Okay. However, there are disadvantages on this. So it's difficult to track intercompany transactions. So if you're using one Xero organization, you might need also to create now a separate account inside. And like earlier in the setup, the proper setup would have the same code. Here you would need to set up different code, 895 or 896, and then you'll just need to create internal transactions inside, either as a manual journal or not. It's very awkward when you're doing it. This is a big headache. So if you're a company where for each company would require different access of accountants. So let's say there will be another accountant for company A, company B, company C, separate individual accountants. All of them will have access to the data of one Xero organization, and therefore they would also see the data of the other company, because the access to Xero cannot be classified according to tracking. So if you're an advisor access, you can see everything, regardless of what company and B. So if you limit access of information from other company to this of accountants, this becomes a disadvantage because he or she will be able to have access to this. Now, number 3, sales tax report. So if you have different VAT reporting for each of this company, you cannot run a separate VAT report for each company. The report that you will get is a consolidated. Now, your problem will be aggravated if, for example, each of these company would have a different reporting periods. Example, in UAE, not all organizations would have the same quarterly filing. So some people would start a period between March, April, May, and then some organization would have May, June, July. Other organizations would have the normal quarter, April, May, June, right? So if your companies here have different, you will have issues in using Xero and creating a VAT report in Xero. There's a workaround where you can create separate tax type, but it creates a lot of risk of errors, of misclassifying the incorrect tax type. Another would be pay run. So pay run cannot be split in several companies. So if you're using pay run, when you enter a pay run, does not allow you to assign each employee to a particular company. So your workaround here is, once you have done a pay run, you need to create a tracking adjustments in manual journal, meaning you need, after you post the pay run, you need to create a manual journal reversing the unassigned items and then allocate individually to debit the wages or whatever your pay items lie in their accounts, split them according to company type. That's a headache, okay? You would do that every month. So that's the workaround. So that's a disadvantage. In terms of Forex adjustments report, also the same issue, you cannot split. Now, there's also that risk of error where inside you will have an assigned transaction. So you're not able, or you forgot to classify the company. So you need to review again. It adds another layer of review, making sure there's no unassigned tracking in your system. So this method, as far as our firm is concerned, we strongly, with a heavy heart, do not recommend this method. Never. Okay? We advise our clients to do either the second or the third method. So let's go to the second method. Second method is using Excel or spreadsheet. Now, actually what we recommend is method 3, which is the third-party app. But the real disadvantage between the two of them is that the third-party app is a little bit expensive. Now, it will require you to invest more, okay, on a system. So if you are in a low budget, we recommend for a spreadsheet. So generally, you would have one company, one Xero organization. So you create multiple separate Xero organization for your company. And since Xero does not have a consolidation tool in itself, you would require to export it and then you do manually the consolidation. I will show you a demonstration on that. Also, one requirement is you follow also the basic setup for consolidation. Example, the chart of accounts, the setup of individual Xero organization, that must be done properly. Okay, so let's demonstrate this. So let's go to here. What I will do, I'll open another Xero organization so that we can change windows from time to time. That's the only purpose of doing this. So I'll do Delta 2 here. And then I'll also do Delta 1 in the other main browser. To save time, I've already created the data and made the report ready for you. So if this is our P&L and this is August, okay. And then 2 periods. Okay, and then I do not filter. So I'm treating this as separate company to each other. So this is my P&L in company 1, and then this is my P&L in company 2. So this is my company 2, 02 P&L, and then this is my 01 or Delta Demo 1 company P&L. Now, once I've done that, I will export it in Excel. This one I will export in Excel. Okay. So I downloaded my P&L without the totals for demo 1 and then the demo 2. And then what I do very simply, without further complication, I just added them together. So here is the formula for the sales of this one and this one. Now, what I always do is make a check, making sure my formula is correct or my total is correct. So it's 0 because I'm deducting this against the total of this and this separately. So then it's 0. So I have 0, then this is a consolidated P&L check already. So done. So next I would do balance sheet. August, this month, run. Again, I will download, export this. So I'll do 2 months here. And then I'll do the other one, the other 0, create the balance sheet. Then I export that, and then I put that in one Excel. So this is my balance sheet in demo 1, my balance sheet Excel in demo 2, and then again, I'm just simply adding this, right? So now here, you notice in my balance sheet, I have a 0 line here, no? So why did I have this? Because here, when you look at my balance sheet, in my company, this is a receivable, basically a debit entry because it's a liability, negative liability. So it's a debit entry, 15, 16, 27. Now, if you look at on the other Xero organization, you have this as well, 27, 16, and 15, right? So they are knocking off. So if this is 15, the other one is negative 15, it's knocking off. So they are eliminating to each other. My entry would be actually 0 already. So I have done my elimination entries already here. So it's already 0. So because intercompany becomes 0 if you combine them together, because the other side is a receivable, the other side is the payable. And then it's just a simple linking of additions of balance sheet D1. And for the banks, so you notice I'm showing 2 banks here, 3 banks, because the first company has 2 banks, the third company has 1 bank. So in your consolidation, all 3 banks must show up, okay? And then here, I'm just linking that properly to that specific bank account, like for South Bank, I'm linking it to D2, right? But for all other accounts, it's a simple link of additions of 2 companies like this, accounts receivable plus this one, and then here. Now, if you notice, again, I'm doing another check. So I'm checking this current year earnings. I wanted to see whether my consolidation is correct already. My technique here is I would look at the current year earnings total for the latest month and then match it with my P&L totals. So if my P&L totals here is, if 85, that should match here as 85. So my consolidation is correct already. The same thing I would do with my movements in equity and then also in my statement of cash flow. I'll do that the same. And then I will also, on the other side, I will run also that report here. Okay. Movement on equity. And then I export it to Excel with the same filtering. I will do that now. I'll just go directly to the Excel. So then statement of cash flows for me is this one already, right? So it has individual. And then again, I'm totaling the company one and company two as a consolidation. But again, in my consolidation report, I do another check. So how do you check that your statement of cash flow is correct? Okay, the trick here, my friends, is I wanted to check the total of this. You know, your ending cash balance must match to where? In your balance sheet, bank. Okay, so your balance sheet total in cash, 753. Yeah. So as a good accountant, you should know the relationship between your reports, right? What number in your P&L that you can connect and confirm that you can find in your balance sheet, what number in your balance sheet you can find in statement of cash flow, vice versa. So that's how I do a check. So to check always, my standard process is to check my end match with my balance sheet, cash bank, and then my P&L accumulated will be my current year number here. So this, they are linked all together. Okay. Now, also for movements of equity, I've downloaded here, and then I have a consolidation here. Then I also do the checks. So this number must match to where? To my balance sheet as well. So my equity, this one must match in my balance sheet, must match to my equity here, right? So yeah. Basically now, my friends, you have an Excel consolidation report. You can be fancy with your Excel report. You can add other things, but like an open page or maybe notes, how you would want to prepare it, you would change the heading. It's up to you. But that is basically how you do a spreadsheet method of consolidation if you don't want to opt on the third option. Okay. So this is not very expensive. So your data is separated because you have different Xero organization. Access of different accountant to different organization would not breach to each other's Xero organization. Reports are always separated. You can customize report because you're using Excel. Okay. And then sales tax report, which is a disadvantage in method one, is it's fine because you can see the report separately, the sales tax report, your VAT report. Okay, you can run it separately, okay, from your other organization. So this is for my organization. So I have a separate one here. So I can have one compliance here report. I can based on when I'm submitting the VAT for this company too. And then on the other hand, I can run a separate sales tax report on this company. Again, I have to set the tax basis here. Or update. Okay, so now, so what are the disadvantages of this? Disadvantage of this compared to your first method, you need to subscribe multiple Xero organization. You need to export every time. Okay, so when you are updating Xero, you need to update your spreadsheet. Therefore, you need to export again. So that is the most difficult part of this. Of course, because it's in a spreadsheet, you might get lost. You know, if you're not very organized, there's the risk that of losing the report somewhere. You save somewhere, you cannot trace it back. And you need to always, like I always do, I need to check accuracy, that the reports are connected to each other and they are on the same data. Okay. Now, I'm showing only 2 companies here, but for example, you have 10 companies, therefore you need to export set of reports per company. And then towards the end, you need a consolidation per group of report. Okay. And then make sure you need to do also elimination entry. And then, of course, that issue of multi-currency. So, for example, you have a group report and you have cross-border organization, you would have different reporting currency. So it's possible, in our experience, many headquarters would want their reporting currency as a USD, okay, but all other organizations would have the local currency. So in the Excel, you need to convert before doing consolidation. So the download is in a local currency. You have to think that there is a consolidation currency, no? So when you're thinking of consolidation, you would now think reporting currency, okay, base currency, and then of course the consolidation reporting currency. Now, maybe each organization would have different currency, but your consolidation reporting currency is USD. Then you need to convert first to put them in the right conversion rates and then do the consolidation totals. Okay, so for a long time, I'm using also Spreadsheet. So I'm fine doing with this. You get to overcome the disadvantage, but at least you'll have the report. Now, finally, we'll use a third-party consolidation report app. So I will demonstrate here using Fathom. So Fathom is just one of the third-party app for consolidation reporting. You can find this in Xero Marketplace. Just go to the category reporting and then you would see and find consolidation tools. So you can select Fathom, Spotlight, Futurely, Data Site, Join. There's also another one, DaVinci. It's also an old one. But for me, I've been very comfortable with Fathom. This is what I recommended. Also, Futurely, I also recommend Futurely. When you're subscribing to a third-party app, you need to only to create one login, okay? But you need to have one Xero and one organization in Xero, no? In my case, I have two Xero organization, okay? But I can have only one Fathom. Now, let's do a demo. I've also prepared the demo already for you. So I've set up the Fathom already, and this is how it would look like. But just for initial presentation purposes, Fathom can help you many things, right? So analysis, report, forecasting, benchmarking, consolidation, alerts. So Fathom is actually a financial reporting tool. It's not an accounting software. It's a financial reporting tool where you can do analytics. You can do also report templates. You can make forecasting, benchmarking, consolidation, and alert. But for these purposes, we're using the consolidation feature of Fathom. Okay, so just to give you an overview of the pricing, don't be surprised. So the way Fathom is priced is per number of companies if you are consolidating. If you have only one organization, then you don't need Fathom, right? But if you're doing consolidation, like in my case, I will have two companies. So therefore, I would pay $88 per month for two organizations. It's very expensive. And if you have 10, it's cheaper because you only pay $25 each. As you scale the number of companies in your consolidation, you're paying less and less. No? So this is not only true for Fathom, this is also true for other third-party app for consolidation report. Now, why you're paying more when you're consolidation? Because when you're paying Fathom, you're not paying only for the feature of consolidation. You're also paying for other features altogether. You cannot buy Fathom for consolidation purposes. When you buy it as its basis when whatever features is available. This would mean investing to a third-party app. So in our case, if I will subscribe to this, I will have $88 per month on top of my $40 in Xero. So my cost of system per month now would be $124 per month. And if you're a small company, that is not a joke. So it's very expensive. So many companies would use Excel, but I'll illustrate this for you. Anyway, so I've set up a company and I created the company called Delta Demo Group. Now, what I do is I integrate my Xero organization demo Delta 1 already, Delta Demo 2. I just did it here, okay? I can add the company individually. And then once I have this, I added a consolidation group. I click this and then just select whatever consolidation group I can add. So here I take this and it adds. No? So I have that consolidation. So in my Fathom now dashboard, I have the individual Xero organization, and then the number 3 would be my Delta Demo Group inside. Now, the best thing about this is everything is integrated and automatic. You don't need to Excel, you don't need to do elimination entry. As long as you set up this properly and your Xero properly, like you have a generic uniform chart of accounts, okay, account codes, then it's very easy to run here. So make sure you set up Xero properly and your consolidation and chart of accounts as well. I've done the integration myself already before doing this webinar. I will just show you how powerful this is. So what I will do first is I will update my data. So I will update individual first before I run a consolidation because it's integrated. it allows me to update first because maybe you just entered earlier now. So you need to sync the data of your Xero to Fathom. So this is for demo 1 company. So done. If you notice my chart of account, it's pulled from Xero itself. And you would know that I have a common account, right? The same with all my Xero organization. Now, initially, it would show here due to from, this company. And what I would do, I would just classify this as eliminate or not eliminate, no? So here, that's not ever because I already eliminated to each other. And that is because I have the same chart of accounts. Now, let's go to my other company, company 2. Okay, so I've set up this properly already. I've eliminated the accounts already with the same codes. So then I update this again, the second company. So if you have multiple Xero organization, you update one by one before running a fresh consolidation report. Okay, so it's updated. You would know when it's updated. This date will show up here. And then my chart of account is the same thing. It would be the same standard chart of account, what was pulled from their individual Xero organization. Just to show you the consolidation setting, so I would know there are 2 organizations in this group. So the setting would be manage group. I will see group, so I have this all groups inside it. If there's additional, I can add also. Now, what I would do is update. Okay. So now I'm dating. So once I have updated individual, then I update my consolidated group. Now, once I've done that, then I can run my report. Okay, so now what I would do is I will run a report here, click report. Okay, it will show you this screen, allow you to create from scratch report or you use a template. So for simplicity's sake, I will use month of August, then I will use what you call this month and last month template, meaning the previous months I will compare. So I'll create a report here. The system will run for me. You can edit the header if you would want, no? So this is now your report here. So once you are ready, here I think you can change colors. You can add the logo, right? So discard that. Now, I can go to I have this draft report already. So I can edit this report if I want. Okay. Edit this report. Okay. I can edit this report. Otherwise, this would be my draft and this would be my. So what you would see now is August and July comparative P&L. Let's check if this would match to our Excel. So in my Excel, it says here my August and this a number. Okay. So let me just picture that. Yes, it's a match. It's a match. And no, because this is only July. There's no June. So this is 2 months. So it has also variance analysis. You can also edit this. Now in the balance sheet would also be here as well at the bottom. Okay. And then let's compare the balance sheet totals in your R Excel because it has a different method of reporting I have. I use the total asset. The total asset would match to my total asset also here. 398 and 291, and then the bottom is 398 and 291. Okay, it's not IFRS method of reporting, but you have now a consolidated report. So now I've shown you that every time I just update Xero, I'll just update the Fathom. That's it. I don't need to export and then map again and then update my totals, which is what you do in a spreadsheet method. Now, so it's very clear that the third method is the most preferred method because separation of data, the reports are separated, access per company is separate. You can only give access to higher level access to your director or managers for the consolidation without necessarily adding your accountants to the consolidation. You can customize report in Fathom. Sales tax report, the same advantage is separated in individual Xero. Third party allows you to integrate. They are connected to each other, centralized and automated. Okay. Flexible multi-currency. So if your Xero has different multi-currency, you can set up Fathom to have a different reporting currency. And then your individual Xero automatically recalculates that. Okay. So there's a flexibility on multi-currency reporting in Fathom or a third-party app. And then, of course, other than the consolidation, you would have other analytics report, KPIs, forecasting. Maybe you would want revenue reports. So I'll give you an example here. back to report. And then let's say I'll create another report in monthly performance report, right? So then you would see analysis here. Immediately it will tell you without making notes, okay? Positive uptrend. What was the difference? Active ratios, efficiency. So these are your KPIs. They're very visual, okay? And it will tell you where you spent your money, okay? KPI results, total revenue, gross margin. This is high-level reporting. And because again, Fathom is a reporting tool, no? And then there's a lot of report inside. You will see KPI result, revenue analysis, profitability chart, cash flow charts, all this way, all down. This is a standard package reporting. So top expense account now, which you don't have in Xero. So it's a good tool. There's value on what you pay. It's not only consolidation, right? So it gives you a high level of financial analysis, not to replace our analyst, but there's something to start with. It's very convenient. So if you can afford and invest on this, you would have Xero organization and invest on third-party app. Your reporting, very much convenient. Okay? So it's a little investment that you can do. Now, go back. So disadvantages, of course, only two. You need to subscribe more than one Xero because you have to split different organizations to each Xero organizations. And then you need to invest on a third-party app like Fathom, for example. Yeah, so that's are the three methods that I can share with you. Now, on the final, I just leave to you this final tips and notes. Notice that make sure you set up your reporting consolidation. So Xero, you have to set up properly. Your Excel will have to be set up properly. And then your third-party app must be set up finally. Number two, before doing any consolidation report, like any good consolidator or group accountant, if you are not a group accountant, take note, when you become a group accountant or a consolidating accountant, you have to always make sure that the individual company's trial balance are already finalized and closed before running consolidation report. Because if you do not put that control, you run the risk of always updating, and then you would be communicating a wrong consolidated report. So finalize first individual trial balances of each organization before you start consolidation. Number three, of course, you need to check the accuracy and completeness of your intercompany transactions. Check whether the mirroring entries from related transactions, intercompanies, are being recorded so that when you do an elimination entry, the result will be zero. Okay? If it will result a number, due to from, for example, using the nomenclature of the account is due to from company A to B, right? And if it's not zero, that is wrong. Meaning the other company did not mirror the same opposite ledger from the other companies, the related party. To know that it is correct, your intercompany account must be zero. Okay? If you see when you run a consolidated report and there's a number either negative, positive, go back to that account and said you did not do anything. You reconcile with this other company. Make sure you have a mirror entry and ledgers. Okay? And then you update, of course. Four, and finally, if using a spreadsheet or a third-party app, when you made updates in Xero, make sure you update also your report. Okay? So like you saw earlier when I demonstrated, every time before I run a consolidated report, I update the individual Xero organization in Fathom. Okay? So I hope you learned something about consolidation when you're using Xero. So I presented to you different methods and ways, and I hope that is applicable for your organization.